Good morning, everyone. Welcome to the On Time On Target Morning Brief. We are going to talk about what is going on in tech today. Not only what's driving, we're going to cover what's happened. We're going to talk about factors that are driving this sell-off, at least in my opinion. There's several opinions on CNBC. I've kind of focused it down to just a few, which I'll tell you about, and at least you know where I'm coming from, especially if I'm managing your money. And more importantly, what to do, what actions to take right now, and based on where we are going forward. So that's what you're going to get out of the show today. Specifically, we're going to talk about the NASDAQ, which is the QQQ, to kind of show you, the sell-off has been tough. That's for sure. But really, this takes the NASDAQ back to levels not seen since, guess how hard it sold off? Guess when the last time we were down this low? April 1st. Yeah, and that's not an April Fool's joke. It's just, no kidding, it's for 6 weeks ago is when we were here. So now we had a lot of gains and then right back down. So it can seem like the losses are piling up. It can seem like the all is lost. It'll seem like the let's run for the door. But in April, when we were up, 12, 14% on the year going into that. Remember when I did the video, sell in May and go away? And I said, here's where we are. And I did take some risk off of the larger portfolios, especially if those that asked me to. That we're at this level, we're all happy to be here. So a lot of times it's a matter of perspective. I'm going to show you those charts so you can know exactly what I'm talking about. And often on times like this, you need to zoom out, especially since we're off. The NASDAQ was off 2.5% plus yesterday. And then this morning already down 2% in the open. So that's where we're going to focus out today. But before I even get started, if you're watching this and I manage your money and you want me to take risk off, simply say, take some risk off. I've done that for some of you. I've let it ride for the rest. So if you don't like what I'm doing, or you'd rather just dial it down a little bit, just tell me that, reach out to me, text, email, call me. It may be a tough day to pick up phone calls because it's so busy today. But just let me know. It's easy to do. We can always add it back on later. All right. So that's what I've got for your show today. Hopefully you enjoy it. We're not going to trade today. So there are no trades in the room. It's too important that we get the long-term investing stuff right because a lot of decisions need to be made this morning. I've got everybody's portfolios printed out. I'm going to go through line by line and exactly what we need to chop out of there if we need to reduce some risk. So if you're catching us on replay, thank you so much for checking us out. Make sure you hit the subscribe and notifications bell so you get notified when this goes live every day. And if you want to join us in the room, it's $25 to come on in. What you don't see is a chat window and a Q&A window above here where people can ask me questions. And today's a good day for questions, everybody. So ask away. Ask me questions, I'll answer them to you real time. So you've got me available to you at the market open every day for $25 a month. All right, with that, let's go ahead and get started. Welcome back, everyone. Here is the lineup card for the day. Make sure you have your Q&A window set up correctly, as well as your chat window. And got new screens here this morning, so some goofy stuff going on. Give me some feedback, though, if you don't like what you're seeing. I've got some resolution issues on my new screen, so we'll try to stay on the main screen for the most part here. Make sure you have your windows open and set up correctly. Standard disclaimer applies to this financial education presentation. You have to do your own due diligence before you take any action based off this presentation. Full disclaimer information is available at ototnow.com. All right, welcome to Tuesday, May 11th. And the selling just continues, right? So if you really look at yesterday, you had the Dow You had the Dow and the S&P in the green most of the day. Things started to go south, kind of sold off pretty hard midday. Shots fired in the Persian Gulf, Strait of Hormuz area. I lived that life back in 2012 for a year. I lived over. That's a big deal. Now, a lot of times there are shots taken over there that that don't make it into the mainstream news. But you have, pipeline cyber attack, Russians group taking credit. That's driving the price of oil higher. People are already stressed out because home prices are going higher. Of course, kind of cracks me up. Even people that own homes are stressed out about that because they can't move or their property taxes are going up. It's like, I do get frustrated with people sometimes because it's like, you could also view it as a good thing that your home is worth a lot more and it's not going back. I do think the new levels are going to set a floor here. I don't think that housing is a bubble at all. The term I've been searching for, I found yesterday, is suburbanization. So it's kind of a mouthful as far as syllables. But folks are actually, COVID or the multiple strains in India that, are being reported. Who knows? It's probably too early to kind of know what we have on our hands there. But, you're looking at that stuff. People are moving out of the city. So that's your suburbanization. So home prices are going up pretty much everywhere, right? So, if you're a homeowner, you should be happy about that. You're adding net worth, honestly, for free from an appreciating asset, which is the piece of land. Remember, the house is depreciating. The land is what's appreciating in the location there. So people should be happy about that. But that's also stressing people out. So a lot of negativity. The shots fired in the Middle East yesterday was kind of what took the market well into the red during the close. NASDAQ was already off. So much like this morning, we're starting down a couple percent in the NASDAQ. So yes, your favorite names that you see down here, the QQQs is just the NASDAQ index fund, but Apple, Amazon, Google, we did have Roblox. I've been saying that incorrectly, and I probably will again. I'm really trying. I don't know. I have a mental block with that, but Roblox, and then Coinbase. Coinbase reports Thursday. So I did the show yesterday on the high profile earnings and sent that out. So if you're interested in that, take a look. But yeah, I reported yesterday that Roblox is a buy. Coinbase is a wait and see, and then it goes up 12% yesterday on speculation going into the earnings. So that's a good sign. So there are good news stories out in tech. But Apple, Amazon, Google, what I would call the thoroughbreds of tech, or FANG, as you hear on the CNBC with Kramer stuff. I mean, they're selling off for absolutely no reason. Remember, these all reported and they all crushed earnings, and their stocks largely yawned. So it's like, pretty interesting. So we're going to talk about what is going on in tech. I'll pull up the QQQ chart, and then I'll give you the 4 reasons that I think that tech is it's not even in correction yet. It seems bloodier than it really is. I know if you look at your portfolio and you have a 6-figure portfolio, obviously when things sell off and you're down thousands of dollars day after day, even 2 days can really wear on you. But realize that those thousands of dollars that you are losing now, you didn't even have 6 weeks ago. So you're kind of resetting back to where you were, and we'll talk about that. All right, the question that I didn't get to yesterday was the trifecta of earnings reports. That's kind of what's largely behind the scenes here. Normally that drives the market, but I think there's other things really driving the market right now. But we're going to talk about what's so important about that, including the conference call there. All right, the flow will be long, short, open, short, long. We'll take a look at the market review. We're going to spend more time talking about the market review today than anything else. We're going to go over each of these long-term trades, some of them before the open. We'll kind of watch the market real quick at the open, and then we'll have these pulled up, and then we will go in and talk about them individually from a long-term investing perspective. So again, that is the focus today. We're not going to do any short-term execution stuff. Contingencies and academic resources are standard. All right, let's take a look at the TD Ameritrade Think Pipes platform. Normally, and again, that resolution is different. If you can't see it, I'm sorry. I will fix this tomorrow, but you can see the line. I know that. Could not fix it yet this morning. This is a new monitor, which is beautiful, but I just can't fix the resolution for some reason. So normally we talk about the SPY, and that's what you're seeing right now is the SPY. So that's the S&P 500, and the S&P 500 is fine. I mean, we're still in a wicked up channel here. We've had 3 straight up channels of differing levels. Again, this is a 9-month chart, and I can't have to get down here to actually look at it. This is May of, well, no, it's not a 9-month chart. That's why the issue here. So this is, yeah, it is a 9-month chart. So this is May of last year. So basically steady uptrend. Look at all the money that's been made and still being made. We did have a little bit of reset yesterday, but really, I mean, what's this, 12, 13, 14, 15 days of trading days in a row for the move up. So that's the S&P 500. Now let's go over, it's a little different story in tech, which is the QQQ. So really, this is why I bring this up. There, this is a better chart. You can see these lines a little better. So here's where we are. This does not include this morning. Okay, so this is yesterday's report. This big red candlestick right here was yesterday's fall. So really, when you look at this down to the 325 level, we maxed out just above the 340 level, hung out here for what, 2 weeks, basically. Each of these is a trading day, and now we've come back to this level. But yeah, go back to the left. We were also here at the beginning of April. We were also a little bit higher than this at February 11th. It looks like February 12th looks like the or 14th, 15th, somewhere in there, right around Valentine's Day. That was kind of our previous high. So really, you look at the action, we were all the way down here. We're well above where we were in March. Okay, so if you back it all the way up to the year, here's where the year started. We are up for the year, and it seems like we're not. Right? It really just seems painful, but it's not. That's your emotions getting the best of you. Is we're still up on the year, right? And that's just for the tech stuff. Now you can look at individual names, and sure, some of them are down. We'll look at that here in a second. But a lot of volume in tech, especially during the sell-off here. Where will this sell-off end? Well, when you look at previous sell-offs, they don't end after just a couple days, right? They sell off. You know, for what's this, like that's 3 weeks, this is 2 weeks, this is another 2-week sell-off. So there's these baby sell-offs, there's these big moves down, which I could see us doing this, where, you know, back in when was this last August, you know, falling down, kind of consolidating, and then going higher. But when you look at this chart, if you zoom out, it is going up, right? And that's what really you can expect, regardless of the forces that act on it. So all right, let's zoom in a little bit. This is a 20-day of the NASDAQ. And so that now takes out the previous highs. So it takes us off the screen. This is what everybody's feeling, right? Is like we've spent all these dark blue days are, you know, trading days. So we spent almost a month up here at the 35 to 340 level. We had the sell-off. It kind of came back, and now we're selling off again. And then yikes, this is real time this morning. You can see this is where we left off on the other chart. And here's where we are this morning, selling off kind of hard. So that's what we will take a look at today. We'll come back and populate this chart here in a second. So let's go to this. And all right, so this is I want to pause here for a second before we go around the world and just talk what's going on in market philosophy. All right. The 4 factors that I think are affecting now there's lots of market forces always, you know, acting. When you look at a big picture, you have we talked about, you have stimulus, yes, plus this is for 21. So stimulus, yes. Infrastructure bill, yes, it's happening. We'll still argue about the specifics, and it's mostly, you know, there's a lot of extra stuff in it for sure, right? But it's gonna, you know, some form is gonna come out probably by July. We have the winding down of COVID / the increasing the vaccine. Are we winning that war? I would say as a large part we are. You know, we got the news yesterday for the Pfizer vaccine all the way down to, you know, 12 to 15-year-olds. You know, we got some negative stuff going on in India, right? So are we winning? I think the net of all of that is yes, we're winning, but certainly it's not like clean kill and everything's going to be back to normal. But I think it's transitioning towards normal. So those are 3 tailwinds that are going into 2021, and that's what's carrying the market higher. What is the headwind? The headwind is tax reform and what's going to go on. So that leads into the themes of why are people selling. So the 4 reasons tactically why people are selling. So that was kind of strategic for 2021. Tactically, why people are selling now, in my opinion, is there's the sell in May and go away crowd, which again, it's early May still, where I mean, we're a third of the way through, but there's folks that, like, at some portfolios I sold literally on the 1st of May or, you know, the 29th of April, whatever the last trading day was, because that was a weekend, if I remember. There were some where I de-risked some portfolios there. Well, now there's guys like me that are hearing about it from clients. They're like, I want to take more risk off. And it's like, gotcha. And they're like, is this the sell-off that I was talking about? I'm like, yes, it is. So, for those folks, I need to go back in and sell some more. So I'm forced to kind of sell because of, de-risking, and that's the sell in May and go away. We'll see if we ever re-enter. You're up for the year. That there's people who are saying, I'm good, right? I don't want any part. I don't trust the administration. If you're on that side of the fence, they're like, I don't want any part of market exposure until, this storm is over, if you will. It's like, okay, well, we can do that. You adjust your sights. Your potential gain obviously is reduced significantly if you do that. There's also the specter of capital gains tax, and some people are thinking they need to take that now before the law changes. And you do not need to be in a hurry. It's either going to be retroactive to the entire year or it's not. That is very rare. I don't know actually of a single case, please let me know if I'm wrong, where a tax change that affected people negatively was implemented year of, right? If you can prove, if you have that data, send it to me. I would love to read about it and get smarter on it. But generally, if it negatively affects folks, it takes place the next year, right? It's a little nightmare. The beneficial stuff, sure, they've come out with stuff in December that's beneficial and made it retroactive for the year. We did that with COVID all last year, right? It's a nightmare for the tax folks that, TurboTax and H&R Block, because they have to keep updating their tax code. But the tax, we don't know what's going on. You do not need to sell ahead of time to get into, to avoid this taxes. The third one is people just simply moving to safety. Your tech names have run up a lot. So a lot of people have stop losses on them. So, if Apple comes down 10%, I'm going to automatically sell. People are hitting that. And then the last one is crypto. We're closing in on the market open here. So we're about a minute from the market open. I'm going to talk about crypto once I get things set up here a little bit. So at the market open, again, we're not trading today because we really need to make sure we get trading's largely a sideshow to you want to peel off some money when the market gives it to you, but certainly it's a sideshow. If you're trading for a couple $100, but your portfolio is 7 figures, the trading you're doing is really more entertainment and just making a little bit of money on the side. But here we are on the TD Ameritrade platform. We have 30 seconds to the open. You can see Apple, Amazon, and Google are really pretty much all down. Google more than, this looks like a different chart. Let me back this out just a little bit. So let's see if we can find the right screen here for Amazon there. That looks like everybody else. Again, the light blue, if you're not used to seeing this, the light blue is the market. So there we go. So now the market is open. So you have the S&P over here is down 1.27%. Let's just go ahead and switch that to the Qs real quick. Voice cracking. Q's down 2%. So that's kind of where we're open. And again, what we're focusing in on the action here at the beginning. You can see Apple down another 3% after being down, 3% yesterday. Largest holding in the book, largest holding personally, largest holding for several people. Am I worried about Apple? Not at all. We'll pull it up on the FinViz chart and I will show you Apple and, I'll make my assessment. Amazon down 1.66%, so down a couple percent again. Are you selling Amazon here? I would say no, right? Amazon's another name you're going to hold. You get into a trading mentality, so that's why I put these 3 names up. And you have Google down 2%, and Google was almost flat yesterday, I think, if I remember right. But you have these 3 big horses, right? I mean, these are workhorses of the American economy. The number one, Apple luxury tech, right? Driving all kinds of different things. You got Amazon, has their hands in everything. Google, YouTube. We're on YouTube right now. Well, I'm on Zoom right now, but it goes up through YouTube. If you're trying to fix your dryer, your washing machine, you go to YouTube, right? I mean, there's so many things you go to YouTube literally on a daily basis for a lot of us that it just becomes now commonplace, right? And have you ever Googled anything? Yeah, right. Every day, probably multiple times a day. So they're down. I don't want to say who cares because I prefer when they're up, but I do mean who cares, right? Because you're going to hold these for a long term. If you think of the story of Microsoft, Microsoft went up, I don't know, 10,000% in like 30 years, starting back in the 80s. Well, if you're down 2% on, let's pick a random date. This is not historical. Say on June 1st, 1994, you went, excuse me, you went, oh crap, Microsoft sold off 2% on Tuesday. Oh gosh, it sold off again 3% on Wednesday, and you cashed out of Microsoft and never got back in. Yeah, you're literally the village idiot. You'd be, because you're going to 20 years later sit there and go, stupid, stupid, stupid. Why would I sell Microsoft? That ended up going up that 10,000%, right? So you pick. What's different about my style of investing is it's not just pick some index fund, or I do have themes and I do use index funds, but for my workhorses, you're picking names that have the potential that are going to change the world in 20, 30 years, right? And just hold on to them. So that's my take. Let's see how they're doing. Not getting too much love here at the open. Amazon is a little bit, but that's what's going on with the open. Let's check out big movers. TQLB is in play. That's a penny stock. There's Roblox. Roblox, said it correctly. I have to pause every time I say it, exactly that, well, that one name. Because you can see very few names in the green, almost everything's in the red. So we'll talk about Roblox since they're at the top of the number 2 on the list. 11% yes, excuse me, I was Coinbase. Roblox last night released earnings, crushed it, right? As you would expect. Again, they make money off of parents who fund little kids' Robux accounts, or maybe adults. I'm not saying it's all little kids, but younger folks for the most part. Fund these accounts. And, I'm guilty as anybody. When I parented, my kids at a younger age, it was largely here's an iPad, here's a gaming device. That was the babysitter, right? You give them their little electronic thing and let them do whatever it is they're doing, right? Playing whatever game it is. Well, obviously, Roblox, said it correctly again, has their own economy there. And you can buy stuff in game, you can develop games. There's people making 6 figures as developers, like over 100 of them inside the game, creating things. So really it's its own ecosystem, if you will, and it's making a ton of money. No real issues there. All right, let's look on the downside real quick, and then we'll get back to our theme of the day. A lot of options. Again, your options, if you have covered calls on these big positions, you're actually offsetting your losses. So it's not like you don't care, but at least it's offsetting a little bit. DraftKings is one we didn't really talk about. BioNTech selling off. They were up huge yesterday. Beyond Meat selling off. Luckin Coffee selling off day after day. Mind Medicine that we talked about the other day selling off. Tesla's been hit hard. It's still, I don't know, overvalued to the tune of like 5-6 times over its value. So I would expect to see Tesla continue to sell off. Those names ran up so much, it's ridiculous. All right, Coinbase reports Thursday. So obviously we have our eyes on that. If they miss earnings, we're just going to blow out of it and be done with it, right? That's our crypto exposure, which leads us back to crypto. I'll put in GBTC here as a kind of de facto, the Bitcoin, I said buy below 50 way back left in the chart. It went above 50. Now it's kind of stabilizing in that 40 to 50 range. It's got a huge fee. I've backed out of it for some of you. Some of you still have it. I don't know, it's following the Bitcoin play. So let's lead into crypto, and I'm going to leave this screen. Getting some love, getting some green here, some green bars. I'm going to leave this screen and go back to cnbc.com once I get it set up here. And we'll take a look at that, and we'll talk crypto. Okay. So let me refresh this now that the market is open. So you're looking at CNBC.com. There's your negative big tech sell-off. The Dow's selling off. Yep. All right, crypto. Let's talk about that. So even crypto selling off this morning. So, as a reminder, what I was talking about, 4 things that are causing this tactical sell-off right now. You've got the may and go away, the capital gains specter. You've got the people just want to go to safety right now by either going to cash or going to bonds, increasing their bond exposure, fixed income exposure, if you will. And the last one is crypto. So whenever you have a new thing, when you have like the Coinbase IPO, let's use that as an example. So Coinbase is a direct listing, I know, but IPO, I use that interchangeably. You know the difference. But so all of a sudden they IPO at, what was it, 281 a share, and there's a bunch of people who are like, I want in on that, and I was putting clients in on that, and so far it has just been a loser. But that money has to come from somewhere, so something sells off. So actually, crypto took a hit when Coinbase IPO'd, right? Because who are the people who are going to want in on the IPO? Well, largely people that are already smart and investors in the crypto space. So the money has to come from somewhere. So when you talk about the latest craze we had, especially last week going into Elon Musk hosting Saturday Night Live, is the Dogecoin craze. So yeah, sure, it ran up. Well, the price is increasing, but people are buying. So that money is coming from somewhere. So what kind of investor is in crypto? Well, there's your crypto investors that have been in there a long time, and they're making tons of money, and almost, I don't know of any coin that's not like up if you started January 1st, right? So on January 1st or earlier, 8-10 years ago, you've made a ton of money. But whenever you hopped into this as a crypto investor, you're probably up, and you're up probably big numbers. We're talking like decades of gains type of numbers. Not my cup of tea. I took a pass on it, but plenty of didn't. So you have your crypto investors, and then you have what's called kind of the FOMO crowd. That people makes fun of that, and largely I do too. But there's the folks out there that are like, how long can I sit on the sidelines when something just always goes up? Well, for me as a professional investor, it's just like all day I can sit on the sideline because I don't care. I don't need to be distracted. I can make people plenty of money and make sure they meet their future financial goals by using the standard mechanism of owning amazing companies, largely based in the US, making amazing products and providing amazing services that will get you to your financial goals. So I'm kind of the Pied Piper of the traditional method. However, some people are leaving that space saying, you know what, Steve, I hear you, but you're also wrong because you're missing out on this crypto thing. You need to be more engaged. And it's like, okay, that's your opinion. And, if it costs me a client, it costs me a client. But, if there's people that want to leave the traditional model and go into the crypto space. That's fine. They're right to do that. And if you do that, where do you get your money? And this is my point. You're not going to sell, if you're an investor in Walmart or Costco, you're not selling your Walmart or Costco stock because that's your safety kind of stocks. Those are your value stocks. Those are the boring, Procter and Gamble, J&J. Those are your boring American stocks. And I say that jokingly. They make that 6 to 8% per year. They're not your Apples or your Amazons. That's your speculative portion. So if you're going to put more speculative stuff in your portfolio, and you're doing it correctly as a money manager, whether you're doing it yourself or professionally, you need to take money from the speculative space. And the speculative space is your tech. So that's why I think the biggest focus now is everybody's got to open their coin wallets and Coinbase and get in on this because they all go to the moon. And they may, I'm not, who knows what the future holds, right? But there's all this money that's flowing in, and it's got to come from somewhere. And I think that's from the tech space. So when you look at these four factors, it's causing this sell-offs, where to go from here. So the four factors, again, sell in May and go away. Those people won't necessarily come back till September is when, if they're following that truly, or they get bored, right? The portfolio flatlines because they don't have any of the good tech names that at some point they will be bouncing back in a big way because that's what tech does. They'll be back. The capital gains folks, I've heard people crazy talk with clients of, I feel like selling this stuff to lock in my gain now, and then I'll buy it right back in 30 days. No, don't do that. Just be patient. Let's see what the law is, and we'll go from there. There may be some games to be played if that's the case, but let's wait till we know the rules of the game before we play it. Fair? Thank you. All right. The safety folks, again, the thought there is they will get bored when they're Procter and Gamble and Walmart aren't getting it done in their portfolio. But the crypto folks, here's what I think will happen. There will be a time, in my opinion, where the crypto space resets. I'm not saying it's all going to zero. I'm not one of those people. I think there's room for it in this world. And, Bitcoin's been around for over a decade now. So of course there's room. So I'm not, having this huge realization by saying that, but I think right now crypto is in a bubble. And that all of these altcoins and things, that portion of it, I think Bitcoin, Ethereum, the ones that are on this chart here, Ripple, maybe, I don't know, jury's out on Litecoin, but certainly the two big horses are Bitcoin and Ethereum. They're going to be around. They may not be at 55,000. I do think Bitcoin goes to 100,000 is kind of the main player. And Ethereum's obviously the latest craze. But outside of what you're seeing here, I think a lot of those will go to zero, including Dogecoin. Maybe it doesn't go all the way to zero. Maybe it resets down into the single digit pennies and then just exists forever. And, there will be ins and outs, but all the money that's rushing into it, I think as it starts to come in, and who knows when that happens, that may not happen for a year, right? So you got to be patient on this stuff. I think all that money, when it flows back out, or people, take their gains that they've made on some of these crazy coins and say, ooh, I just want to get back into Apple because I can get a better price point, the money is going to flow back into tech. It always does. So that would be, as I go into conclude here, money always flows back into tech, right? That's your highest margin products and services that are out there. It's the stuff that is changing the world. It is really the company, if you look at investing, being part owners of companies, they're things, right? There's an Apple headquarters and stores, and Amazon is a thing where the cryptocurrencies are, digital assets. So a little harder to, say, that's exactly where I want my money, right? So that's where I think the money is going to flow back in. So when? Don't know. That's what I don't know. But I do know that I'm not selling my Apple here. I'm not selling my Amazon here. I'm not selling my Google here. I'm not selling names like Home Depot going into this. If you're in Chinese tech, yeah, there's some Chinese tech names that we need to kind of roll back out of. Coinbase, if they don't hit earnings, we're done. I'm not selling Roblox here. Trying to think of the other names, looking at, yeah, that's it. Basically for the 5 that I wanted to talk about today. But, it's really kind of you have to hold on. And really, when you look at it, like I showed you, that I should go back to that chart to kind of conclude here, is sharing you back out the TD Ameritrade chart of the QQQs. Even here at, 322 right down, well, it's only down a percent on the day now. So it's actually moved up pretty decent amount. Go zoom out, go back in time. These are levels that are above where we started the year. That's this blue line, if you can see it, is where we started the year. So, this is not a huge sell-off. It's not one to freak out about. Obviously, for investors that have made a lot of money, you want to hold on to that money. I get it, but it's all part of investing. It rains in paradise. These things happen. It's happened here, 4 times in the past 9 months. So just kind of stick with your plan. As far as the big names, if you're in some speculative stuff, that you can blow out of the spec stuff and come back into a bigger name. But really, that's what we're doing. So to conclude, if I'm managing your money and you want some risk off, easy to do, right? I may end up having to shave some of those big positions that I talked about, but we can go to safety. Don't have a crystal ball. If I did, we'd all be rich already. But I think, there's more forces going up here still until we get into the tax reform later this year is when I really think we have to make the smart decision. So that's what I've got for today. I've already talked too long. We will not talk trifecta of earnings today. We'll get to that tomorrow. But thanks for listening, and we'll get back to making sure we get a day trade tomorrow as well. With that, have a good one, and we'll talk to you next time.